All right, here is the video going over my trader model. Now, I'm making this video for two reasons. First reason is to teach you my model in case you want to copy it or take some parts from it, whatever. And the second reason is so I kind of get it out there what my model is, and so you know what my model is. So in my series where I'm trying to become profitable, I can hold myself accountable and you can know if I'm following my model or not. So it's an ICT based model. It's not very complicated, but it can be very profitable, and there's a little bit of discretion to it, but it's fairly mechanical, and you need a decent understanding of ICT already. You need to know fair value gaps, inverse fair value gaps, just basic stuff, right? I trade the NASDAQ. I trade it at New York AM session, so 9:30 till about 11:30 is where I want to trade. And let's get into it. So the main basis of this model is IRL and ERL, which if you don't know is just the move from a fair value gap to a high, right? More specifically for me, I only use time-based ERL. So that is, London high, Asia high, session high. So New York lunch high from the day before, PM high, previous day high, previous week high, along with some other stuff like data highs on new week opening gap, like highs and lows and day opening gaps or whatever, just anything like that. I don't tend not to just use random highs and lows, as I don't find they're as high probability as time-based ones. So how I use these is there's kind of not three models, but three ways I can use this stuff. So I enter on the 1 minute, usually 1 to 5. So using time-based kind of like order pairing, you want to obviously a 15-minute PD array and a 15-minute high. So a 15-minute IRL to ERL move, you want to be in on that on the 1 minute. 5-minute IRL to ERL move, you want to be on the hour. So sorry, an hourly IRL to ERL move, you want to be in on the 5 minute. So say there's an hourly fair value gap, and then you want to go to an hourly high, you use a 5-minute entry model, right? I mainly use the 1 minute. So what I'm mainly looking for is 15-minute IRL and ERL, right? So the first kind of setup model, trade, whatever that this strategy can perform is the classic reversal one, IRL to ERL, which is where we see an ERL target, which is obviously in line with our daily bias. So if we're bullish on the day, say we leave a London high coming into New York, we then see a retracement to 15-minute IRL, which obviously in this case we'd want it to be in discount. And then we get a 1 minute setup, which I'll go into my entry model later, but we get a 1 minute setup from that IRL to the ERL, right? That's the first and the most common kind of trade I can take. The second one will be is if I don't get in down here for whatever, say there's not an entry or that doesn't happen in the New York session, it happens before, then I can get in on a continuation where I use a 5-minute gap. As you can see, we're retracing to the 5-minute gap and take longs from there. In this scenario, get in from there. And obviously this is during the leg, right? So we're not catching reversals from a 5-minute gap. We're using them to continue us higher, if you know what I mean. So the reversal is the 15-minute IRL to the ERL. We're just using that 5-minute gap to get us there. And if we haven't got in at the bottom, we can get in on the 5-minute. And then the third type of trade I can take is ERL to IRL, which is where we take the high, say we take the London high, and then I look to short into a 5-minute fair value gap, usually unfilled. So obviously in this scenario, I wrote out that it got filled, but let's say, for example, we had another one down here that was unfilled. I'd look to take my shorts from up here into there, and that's IRL to ERL. That's good because, as you can see in this scenario, even if we're still bullish, right, then the shorts here tends to usually work, as obviously market always retraces. And obviously if we're bearish, we're going to go there anyway. So, in that case scenario, if the market's bullish and wants to retrace, we'll win. And if the market's bearish, we'll win. The only reason, or the only way we won't really win, is if we're just bullish and don't retrace, right? But then we've obviously got our entry model on the lower time frame, so it's likely that we will, right? So that's why this model's good. Other things I can do is, for example, say this 15-minute got tagged, right? And I want this London ERL as my draw. I can just take, so there's a 5-minute unfilled here. I can just take profits there, right? I don't need to hold it all the way. And obviously, not obviously, but to be honest, most of the time I won't. My trade will look something like that, just targeting the 5-minute unfilled, as I prefer to go for higher win rate, lower RR, right? So that's that. That's my framework model. I hope that makes sense. It's pretty simple. It's not too complicated. Now, to actually get in the trades, I use an IFVG or a CISD, right? So let's pretend this bit of price action here on the 1 minute, it looks like this. What I'd want to see ideally to make this an A+ setup is an SMT. So 1 minute SMT, so something like that. Then I'd want to see the only fair value gap in this leg. So there should be one fair value gap, or the tallest one, or the highest one, I mean. So say there is another one here, then I won't take it till that one gets closed over. And it also has to be the highest time frame inversion. So if there's got this leg here, I need to check the 1 minute, 2 minute, 3 minute, whichever time frame has a fair value gap. I need to take the highest one. So if there's a 1 minute gap, but there's also a 3 minute, I need to wait for the 3 minute to inverse. Or I can just take it off CISD, which obviously I'm hoping you know, but it's just the last, in this case, it would be the last down close candle before, sorry, the last up close candle before we had this move down, right? So the IFVG entry would look something like this. And then obviously the CISD entry would be just on the CISD, right? And I take them on the close above it. So I'm not waiting for a retrace for either of them. I'm just taking it once we actually close and form it, right? And obviously in this entry model, the stop loss goes at the low that we put in before we reverse. So for example, if I think this is the reversal, this is the IFVG, I'll put it at this low. The wick of the low, if there is a wick, we would put it there. As usually, like I said, for this model, I want that wick to have an SMT. So that means that is a protected low and it should not get ran if I'm correct in my direction, right? Now, requirements / rules, right? I want to be taking 2 trades a day max. I shouldn't really be taking that many on most days anyway. I need some sort of SMT. So like I just showed you in this example, there's a small time from SMT here, but say for example here, with this 50-minute gap, when we tap it, if we get an SMT with the S there, then even if there's not a 1 minute SMT on the entry model, say there wasn't an SMT there, that is still a fine trade to take, as we have the higher time frame one. I want to trade with my high time frame bias, right? So say overall we're just in a bullish trend, right? I want to be mainly looking for buys, or overall if I have a higher time frame draw, if we're moving from a daily IRL to ERL, I want to be trading, you know, with that. I don't want to be really trading against that. Obviously it can work on the retracement trades like this, and they're the ones I'm more likely to take when I'm trading against my high time frame bias. But even them, you want to be realistically trading with the high time frame bias as much as possible, right? Minimum 1R, my trades are usually 1 to 3R, usually more like 1.5 to 2, but I can get some that are to 3R that are valid. And that's because I want to keep my win rate high. I don't want to be, you know, going for 20 RR plays and winning 3 trades and getting sort of break even. Another rule with break even is I'll go break even. I do it mainly discretionary. It's usually, for example, in this trade, so there's this 5-minute gap here that we're targeting, right? So we're coming off a London low here. We've got our SMT, we've got our CISD, whatever. We're targeting there. If there's like a prominent swing high here, maybe inside a fair value gap, so it's an internal high, then I will go break even at this high if the RR is not very good. So for example, say it's 0.5R, I'm not going to take profits there, but I'll take break even. I'll go break even, and then I'll hold to the 5-minute gap. That's how I use the break even. Works pretty well. But yeah, I mean, that's basically that. If there is any questions, comment them. I'll be happy to answer them. I'll do a more in-depth video on my model later on, and obviously every time I trade, I will recap it all. So if you don't get it now, you should start to get it. But it's a very good model, very profitable, and I know I'm good at spotting it. I can see it, and obviously the whole reason for this is to just, I need to just get that psychology just completely dialed in. I need to get that patience. I need to get that discipline. You know, it's there, but it's not always there. So this should, you know, this should help. All right. Thanks for watching. Hope you understand this, and hope even if you don't copy my model, I hope there's something you can, you know, take into your trading. If you want to see, obviously, my model on the live markets, go watch any of my other recap videos on my channel. They'll all be me going over my trading day, which will be me trading this model, and you'll see that it presents itself a lot and it plays out often. All right, thanks for watching. We'll see you in the next video.